The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 45, Nasdaq's down 32, S&P's up 6.5. Gold contract down $24, trading at $17.28 an ounce. We got silver down 39 cents, $17.64 an ounce. Light sweet crude up 80 cents, $34.29 a barrel. Notes and bonds. You get the 10-year flat at 139.02, the 30-year up 8 ticks at 179.28, and King Dollar's up 112 ticks, trading 99.234. The euro is at 109. The yen is out here at 107.75, and the British pound's at 122 to 1 U.S. dollar. Tom O'Brien, what's going on?
Good morning. We got some action, man.
We have action. You got Amazon at all-time highs. You got Facebook up $5.50 at all-time highs. Pretty amazing, man. I mean, they're taking over the world, man. There's no doubt.
25-25, not bad, right?
25-25. Let's get over to our man, Mr. Kevin Hinks, at TD Ameritrade Think and Swim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. You want to understand the option market, option strategies, futures, outstanding program. If you haven't test-driven yet, the Think and Swim platform, so easy to do. You're sitting on the site, hit the banner. Bring it up. They'll allow you to trade with paper money. You can follow Kevin and his team every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You know, guys, I think you've got a really interesting market starting here. I mean, it started out where our markets were all kind of soft because of the foreign markets. Then we firmed up across the board, and now it's looking a little bit like a rotation here. You've got NASDAQ down. You've got the Dow and Russell up. So you got the financials strong today. You've got a bunch of industrials up. You got Boeing up over $8. So it looks like they're rotating a little bit. And you know what's the first indication that I think that they're rotating? Dow Jones and Russell up, NASDAQ down, S&P unchanged.
Yes.
So net neutral for the S&P, but they're rotating, look like, from the high-flying NASDAQs to some of the industrials and the Russell, including the banks. When I think about the Russell, I really go right to the banks and see how they're doing.
Yeah, those regional banks. Now, I can see that. And, you know, I'm sure it's got to be so hard to sell some of those high flyers in the NASDAQ, but we know that, listen, man, you know, the bottom line, this run has been extraordinary. Hey, I want to switch gears with you for a second. Folks, you know, every day, you know, Kevin's on Tuesday, Wednesday, and Thursdays. It's a great show. And if you listen to it, okay, last Friday and Monday, they had a phenomenal show because they broke down. Kevin, can you talk a little bit about, I was listening Friday and Monday, and when you guys did that, starting with the vertical spread, showing how you build everything out, man, I thought, you know, that 1 hour alone, you could read 10 books and throw them off the wall, particularly when you're starting in the option market, right? And you folks, could get to understand not only just one strategy, but, you know, Kevin, JJ, Coffee, you guys got into, you know, well, you were particularly getting into heavier strategies at the end, which was pretty cool, man. But if you can you just lay out, like, kind of what you guys are doing there?
Yeah. Well, we did there on a show that aired Friday and Monday. We really did, JJ Kinahan and I and Alex Coffee did an evergreen show that it wasn't specific to any one name, but it was about really a lesson about the strategies.
Yes.
And breaking them down, and more a show that you can watch any single day to reinforce the fundamental concepts that we talk about every day. So we took a step back, did a show that we can replay over and over again about just fundamental concepts of trading, high implied volatility, low implied volatility, and then expecting movement versus no movement.
Yeah. And, you know, folks, the next time that's on, we're going to make sure you know that's on, because I thought it was phenomenal, Kevin. You know, because what happens is that whether you're just beginning in options you're in the middle or you're a high-end option player, it was really cool, man, because the strategies were laid out. And what happens, folks, is this. As Kevin says many times, you just tell me what you're feeling, meaning is the equity going up or down, and I'll give you a strategy for that equity, which is so cool, man. Do you know what I mean? So,
Right.
So,
and that's the key, right?
Yes.
It's the key to decide what you think the market's going to do and then fit the right strategy for that opinion, right? If it's high volatility, if it's low volatility, there's strategies that take care of that. And you don't want to have a situation where you have the right idea, but the wrong strategy, right? Like right church, wrong pew.
No, totally. And what's so cool, folks, okay, if you haven't test-driven the Thinkorswim platform, as you're laying out these strategies, what happens on the platform, it's telling you what the expected move is, what the curve is, what the decay is, okay? It tells you all of that so you can take that into your head and then make that decision that you want. Because I know a couple of those that, what happens, folks, is you can start building a trade out. Then you'll start looking at the expected trade and say, oh, hold it. Do I want to really take that much risk? Because, maybe that's not the right risk at this particular point. So instead of just basically saying I'm going to do one strategy, you're putting those numbers together with the strategy while the platform is doing it for you, which is really, really cool, man. Pretty amazing.
Right. What we do on a daily basis is take the boatloads of information that the Thinkorswim platform gives you and use all that to help you make your decision. And at least, it doesn't guarantee success, but it means that you're swinging at strikes.
Yes.
And you're giving yourself the best opportunity to be successful.
Yeah, which is so cool, man. So we're kicking into Memorial Day weekend. We know that the bottom line is that it really just looks like this market's going to just flatten out here, man. We've been flattened out for basically quite some time. There's no doubt we had a monster day last week. The S&P is kind of just laying out here, and I don't think we can expect too much more. Coming into the weekend. This is Memorial Day. We're a week early this year, but the bottom line is that we're kicking into summer, man.
Yeah, that's a really good point. Memorial Day comes a week earlier than it normally does. And then, let's face it, even though we're in a different world than we were maybe a year ago, it's still summer. And kids are still going to be done with school, even if they're e-learning. They're going to be done with school. And as these cities and towns start to loosen up, people are going to start moving. I'm in the camp that this pent-up demand is going to burst when these towns start to open up. So
no, I think it is bursting because
wave coming.
Yeah, I've seen in St. Pete some people that you get a husband and wife. They really had to be locked down because of their jobs. Do you know what I mean? It's like they had big jobs. If one got sick and they brought it somewhere else, and I talked to a few of these people a couple nights ago, and they really felt like they were in jail, and they were like so happy just to be out walking. So it was one of those deals that they're disciplinarians, but the bottom line is that now they felt their jobs even said, okay, we can move around a little bit more. And there was a relief there, man. A big relief, too, Well, listen, man, you have a great weekend, a safe weekend. We look forward to the show in 45 minutes. We look forward to speaking to you next Tuesday, Kevin.
Great talking with you, Tom and Tommy. Have a great day.
You too. Stay right there, folks. Tommy and I are coming right back. We have the Dow up 92. NASDAQ is down 29. S&Ps are up 3.5. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow up 94, Nasdaq's down 21, S&Ps are off 2.5. Let's go inside the Dow first and see what's driving that baby. It looks like I'm talking with Kevin. Boeing's probably driving it. Yeah, there you go. So you get Boeing putting 66 positive points, Travelers 32. Raytheon 14, taken away from it is 3M 17, Disney 7, Visa 6. Inside the NDX 100, the strength versus the weakness out here. You have Ross stores are up 7%, United's up 4.5%, Baidu's up 2%, and you get Facebook up 2%. Taken away from it, you have CoStar Group is down 4%, XPI is off 3%, Netflix is off 2.5%, and Alexa Pharmaceuticals off 2.3%. You know it's pretty wild out here, Tom. So look at this story. Let me pull up. Here it is right here. This is like phenomenal, man. I mean, so market sees inflation well below Fed target until at least, you ready for this one?
Go for it.
2050.
That's right. 30 years. How about it?
Oh, my God. This is like crazy, man. But it is what it is. So let's see how they figure this out. Well, some market lawmakers fretted this week that the combination of central bank and government rescue package could inflame long dormant price pressures. The market's outlook for inflation has languished. Investors are betting on outright deflation over the long term, but the 10-year break even rate, a gauge of traders' expectations for the consumer price index over the next decade based on Treasury prices, is hovering at 1.15%. The 30-year is less than 0.5% higher. Pretty wild, man.
It is. And it could be true, right?
Yeah.
Yeah.
There's no doubt about that, man. And I guess that would be the battle, folks. Okay, that is the battle in the context that, yes, the Fed is pushing all this money out, but the amount of money that was already lost on the downdraft is much bigger than the amount of money that's coming out. So inflation is more dollars chasing less goods going up. And so if there's less dollars in the marketplace, guess what? That's how deflation happens, man. Do you know what I mean?
Yeah.
Let's go to Andy in Boulder, Colorado. Hey, Andy, what's going on?
Not much, Tom. How you doing today?
Doing great, man. Yourself?
Doing okay. Hey, that inflation story is kind of crazy, but it's also not surprising, I guess.
Yeah, I agree.
So, guys, it's and the rotation comment that Kevin made is definitely, I think I agree with that as well. I think it's time to start bottom feeding, and I'm seeing charts like Kohl's, KSS, Boeing, these stocks that really haven't gone too far as what the charts look like, but these daily percentage gains and losses are pretty phenomenal. So I'm just wondering if it's time, as we start to open up, to start dipping our toes into these stocks that really haven't participated, things and so forth.
Let's take a look at Kohl's. So Kohl's, the low for the year is $10.89, the high is $59. Bottom line, you get big department stores. That's the bottom line. They just number-wise, they took in $2.2 billion, and they made 61 cents. What's going to be intriguing here? They lost $3.20 rather. They lost $3.20.
Yeah, they're pretty rough.
So I would say that it really depends. I mean, are you saying you just, because the percentage gains alone, you're saying you're looking for a trade versus like a few-year investment?
Yeah, definitely a trade. Definitely short term.
Yeah, a trade, you can trade this to the top of the consolidation. That's, you're at 1781. Yeah. You're going to go to 2095. Yeah, in a heartbeat, man. Yeah. What you have, that's a nice bar that's laying at the top of the consolidation. There's no doubt about that. Do you know what I mean?
Yeah.
I definitely would not get married, though. I don't buy this aspect that these things are going to come back. This is a whole new deal. And digital, we're all going digital. So I suspect it's going to take 7 or 8 years to get the expenses under control inside the real estate part of their business. Because the real estate part of their business, meaning the amount of expenses that they pay on real estate, is astronomical, man. It's astronomical,
Right. I mean, they went through a period, what was it like last year or so, of selling off some of their properties or leasing them out to 24-hour fitness and things like that. So
yeah, that's not changing. That's the era that we're in, and I think what we're also going to happen. What is interesting is this. I was coming in this morning, I was thinking about this, and of course we're in this business, meaning the real estate part of the business, building, whether it's retail, building commercial. What is going to happen is the large financial companies basically right now are doing two different things. They're saying, okay, not as many workers are coming back to work. And you got to remember something, folks. The financial business in general, probably per capita, has it's thousands and thousands of workers. And they have a large spread. Now, what they're doing, they're going into the suburbs, and they're going after small office buildings. When I say going after, they're not basically buying them yet. That's my point. So what I'd be doing is I'd be looking around saying, okay, who's going to be the beneficiary of that? Because one of the financial, well, not just financial business, but in general, if we look at any of the big office buildings, one of their real problems is this. Let's say Tommy and I are going to work. You're coming to work, Andy, right? And we work in a large office building. They calculating that in Manhattan, it can take 2 hours to get up in the elevator and 2 hours to get down the elevator. That's insane. So that's why I would say that we're not seeing as many people coming back to work also, meaning in those buildings. And so they're looking at suburban buildings, and I suspect, that's going to change things. Now, what could happen, which is really wild, right? And this is where this comes in with the story, is that, okay, all these malls that we have, right? We very well may see some of those stores just turn into, like, guess what? A Morgan Stanley, a Citigroup, right? That's spread out. They know that something else is happening. Okay, I'm going to lease this thing. I can do it in a second. I got a block store. I'm not going to have to rely on elevators going up and down. Most of them are in really good places, So it's going to be intriguing watching this whole thing shake out, But Kohl's, for a trade, I think, all of those dead dogs have a trade. You just make sure that, the bottom line is that you don't basically keep these when they're getting close to earnings, man.
Oh, no. I'm putting I'm putting a stop right in as soon as I buy it.
No, totally.
So I was just thinking the retail sector, just in general, and the Kohl's in particular, just because JCPenney is pretty much no more. Just competition just isn't really out there so much. So even though Kohl's is a big stinker as far as their earnings went.
Remember, though, at the beginning, JCPenney, the same with Pier 1, right? They're going to be selling things inside of all those stores for pennies on the dollar. So those other discounters, that's going to happen too. Do you know what I mean? So you think you have a deal, and then all of a sudden you get on the block, and all of a sudden it's another deal, right? Do you know what I mean?
Right. Yeah.
Cooking, brother.
Thanks, Tom.
Have a great one, man.
Bye-bye.
Have a safe one. Stay right there.
Thanks so much.
Tommy and I coming right back, folks. Dow's up 120, Nasdaq's down 13, S&P's are flat. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 57, Nasdaq's down 36, S&Ps are off 8. Let's go to Ken in Florida. Hey, Ken, what's going on?
Hey, Tom and Tommy, happy Thursday.
Happy Thursday, man. Let's make it a great one.
Absolutely. Hey, I'm a newbie. I'm doing a lot of studying at this point, and just to kind of reinforce as far as the TD Ameritrade, very powerful. I have to agree with you.
Well, welcome to the Tiger family, man.
I'm sorry?
I said, welcome to the Tiger family.
Oh, God love you.
How did you find us?
Well, I watch you on the YouTube.
Okay.
And I'm looking for, I have a chunk of money set aside, and based on what's going on in the stock market, it's like there's opportunities regardless of what direction the market goes. So that's how I found you.
Cool,
and
man.
I've been hooked.
It's awesome.
I tell you, it's like getting adrenaline shot every day.
It's like Hotel California, man. Just so you know, once you check in, you can't check out. And I'm serious.
No.
It's that crazy, man.
Pink champagne. Need the pink champagne. But no, it's great stuff. I have to go through withdrawals during the weekend, and but everything that. As far as the advice on the TD Ameritrade, I put my toe in the water, and just following some of their strategies.
Yeah, they get a great network. They get a great teaching deal, and I would say that just take it slowly. What happens in this business, it takes quite a while just to understand it, and you never understand all of it. It's like life's a mystery to be lived, not to be solved. Every day you learn something, and as soon as you feel like, I can tell you this, as soon as you feel like King Kong, that's when you really got to watch out, because that's when, like, okay, where's that loss going to come from, man? Okay, so it's, King
Kong had quite a drop anyways.
I'm sorry, what?
I said King Kong had quite a drop from the from the Empire State Building.
Yeah.
But,
well, listen, man, we appreciate the feedback, Ken, man. You have a great one, a safe one, okay?
You do the same. Happy Memorial Day, guys.
Yeah, big time.
Thanks, man. You as well.
Big time. Let's go to Ken in Dallas. Hey, Ken, what's going on? Tom from Dallas. Sorry, man. Hey, Tom, what's happening, brother?
How you doing, Tom?
Great, man. Yourself?
Wonderful.
Cool. So
I've got a couple of questions. First off, when I'm watching the YouTube, the chat on the right, is that the same thing as the Tiger's Den?
It's not. So we have a trading room, which is the Tiger's Den. And then on YouTube, there's a whole other trading room, which is so cool. So if you haven't tried it, folks, go to YouTube, just put a TFNN Corp. You can see the chat out there, and, bottom line is that we're going to make sure that we take care of everyone out there, and we're getting used to right now basically talking back to everyone on YouTube also, which is, it's just, within the next couple of weeks, believe me, we're going to make sure that everyone gets taken care of. It's just a matter of just really getting used to it, because we get in action, and we really appreciate all YouTubers out there, because they're bringing us a huge amount of business, man. And I want to thank every one of you out there. It's happening, which is really cool.
Yeah. Well, I'm looking at when to sell some calls against my stock in ABR.
ADR. Okay, so let's take a look.
Alpha Bravo Romeo.
Bravo Romeo. Okay, thank you. Okay, so Arbor Realty Trust. Finance company. Mezzanine loans, okay. Real estate loans, okay. So low's 350, the high's 15. This pays a 15.9% dividend, right?
Yes.
So the real question is,
I don't want to get called away, but I'd like to sell calls when it's at the top of the range.
Okay, so let's take a look here. So you got. So if you go to, let me see this. So I brought up the calls, folks. Okay, so you got October. Oh, that's not bad. I see. It's October 750 is $1. Okay, so let me see this thing for a second. You know what the problem is here is that you have. The top of the range is, let's say we're almost there right now. It's 770 then you spiked up to 839, right? But when you're doing that and you have a dividend that is at that price, man, you are going to get whacked on that dividend, So that's I don't. And you have
That's why I'd like to sell the call against it to lower my basis in advance of the dividend.
Yeah, but what ends up happening is that 750. Yeah, these aren't too liquid. So what happens? Are you watching my screen by any chance? So what would happen here is this: if you sold the 750, the spread is 65 cents to 80 cents, right? So let's picture, if you sold it at the 65, well, you get 15 cents. When you take a look at that in percentage-wise, Tommy, what's that, about 17%, 16% between the spread?
Sorry, if you could do it again. I was pulling them up on myself as well, just making sure.
Well, the spread is so big on this is that you're going to end up getting in, and then by the time you get out, I really think that you're going to almost pay in 30% on the spread.
Yeah, I mean, you can go middle of the market on the options as well. Sometimes
they June, because the July doesn't get that much more for it.
Right.
Just sell the June, as long as it doesn't run up to like 9 or something before then.
Right, but then you could get exercise too,
Yes.
Yeah. So.
Yeah, I don't want to. I want us to keep it out of the money.
Yeah. So.
But if it was at the top of the range and it was going to come back down to 6.5 or 7, then I'd be safe with that 750 June call.
Yeah. It's a tough one, man, right? Because what you have here, what he's saying, folks, is that most calls are puts. You have these go in increments of $2.50. So, at 750, you could get called out any day on this thing, man. So, I understand what you're trying to do. I think it's going to be a very tough thing to do between the aspect that you're into in a liquid market inside the option market there. It's not like, I know I went through this yesterday with the aspect of one of the tigers out there. And as one of the other tigers is saying, basically inside of the den, is that why don't you just take the dividend, period? Because you're getting, if you think they're still going to pay a dividend, they're paying a 16% dividend. Right?
Yeah. So my question is, I don't see a very clear A to B plus C equals C to D, and where does it look like it's going to complete? Because it looks like it's more just kind of going in a channel.
It is a channel, yeah, but this can go to 839. That's game. Yeah. That high volume swing point there on April 9th. I suspect that's what it looks like it wants to do, actually, So if it got there and then failed on price, then you can do something. Stay right there, folks. Tommy and I come right back.
Larry Pesavento is hosting a special event Thursday, May 21st from 9 a.m. until 4 p.m. Eastern Time. Trade What You See, a live trading event. For the first time in over 10 years, Larry will host a live event where you'll watch over his shoulder as he trades the markets live. You'll see how he organizes his trading day, the times most likely to generate a signal, what outside information he ignores, and more importantly, what he does not ignore, and much more. Larry will trade the markets in real time, including the Euro US dollar, pound dollar, dollar yen, the Dow, and E-mini S&P, crude oil, gold, treasury bonds, wheat, and soybeans, and more. When you sign up, you get a month of his daily newsletter, Fibonacci 24/7 included. For all the details on Larry Pesavento's live trading event on Thursday, May 21st, and to sign up today, visit the front page of TFNN.com.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials down 22, Nasdaq's up 71, S&Ps are up 16. Did you hit that market, Tom? What happened out here?
I don't know what happened. We got some red bars, man.
Red bars. If you take a look at this S&P, folks, what you're going to see is this was a fast and furious one. We were just talking with Tom from Dallas. Bottom line is that this bar alone was, let's see, that's, it was a 13-point bar on the way down. And monster volume, by the way. Someone came into this market pretty hard. 74,000 contracts on that bar. If we go over to that's on the S&Ps. We go over to the NASDAQ. Look at the NASDAQ. You get the same setup. In fact, the NASDAQ got hit harder. You know, this NASDAQ, which is always intriguing, folks, is that when you, if you're trading intraday, or you really just want to look at what's going on inside the markets, it's always cool to go to the strongest indice and basically see how it's holding up, you know, because it will give you a lot more information, because there's no doubt that the NASDAQ is running the deal out here. And inside the NASDAQ, of course, you get about 7 companies that are running everything. And what does happen is this, is that, yeah, it's not good. Those companies aren't going to fall apart. But when you are talking about a narrow market, markets are very dangerous. You know, they can last for months. They can last 4, 5, 6 months. No doubt about that. But when they go, that's pretty intense, because the real question is that, you know, all you have to do is do a little selling in some of the big names, and the rest of it comes along with it. You know, so
sure. Yeah.
We had natural gas, so let's at least go over to natural gas. I know we got a lot of traders out there inside the natural gas. I have it down 3 cents at $1.73. We got numbers out here this morning, so it looks like they rose 81 BCF, Tom.
Okay, 81 BCF, and it looks like I got the live chart, so it must have spiked a little bit, I think. We made it up to almost, what am I looking at, 15-minute bars? Let me see. 15-minute bars. I'll zoom in even on 5-minute to see the reaction.
Okay.
So there was the 1030 number, and we're actually trading a bit lower on that number from about 174. We dipped below 172 briefly. We're currently trading at 172.24, looking at that June natural gas contract.
Nice. We get a couple tigers that want to look at silver. Let's get over to the silver market. Now, silver's been on a tear, folks. I mean, a tear, which we needed, by the way. Today, you're just going to pull back with light volume. You're coming. I mean, this is like a classic white cough, folks. If you have my book, The Art of Time and Trade, this is a classic white cough. ICE is set up at $17.96. We went to $18.16. You closed at 18. You're pulling back today with light volume. If you're a bull, what you do want to see is basically kind of how we're trading right now. Building, you want to go sideways, probably going sideways for about a week and a half, 2 weeks would be pretty cool, actually, because you can see what you have to clear is a lot of days of trading. You have to clear from December 26th. That's December, December 26th, going all the way over to March 1st. You know,
kind of the slide below.
So that takes a bit. Yeah. Let's go to John in Philly. Hey, John, what's going on, brother?
Good Good morning, Tom and Tommy. Thanks for taking the call.
Absolutely, man. How you been?
I've been doing great. Thanks for your comment on silver. I called about something else, but just on that topic of silver, Tom, you and I know this intimately, but it might be worthwhile sharing this with your listeners. COMEX silver has a tendency, I mean, just go look at the charts over the past years. When silver gets going, it is prone to ramps higher that, you know, are very abrupt.
Right.
They're a sight to behold, but they often give back quite a bit once those ramps, cease. So that's always something to keep in the back of your mind.
Oh, believe me, that's why I don't trade silver. And what happens? So let me clarify that, folks. What happens is this: when you're in the trading business, you try to stay the amount of probability risk versus reward. Now, what happens with silver is that it's almost like hitting roulette, because to me, there's no rhyme and reason how these explosions go up and down. Where, to me, even though gold goes up and down like that, it's still smoother than a silver. But, you know, it is what it is. But just wanted to clarify that. Yeah.
Thanks, Tom. I called in, wanted to ask you about real estate. The caller on Coles led to you and he having a discussion, and it prompted this question. We need to recall, or I need to recall, that back with the new tax law that was put in place, December of 2017 and began to get implemented 2018, included, of course, a massive cut in the corporate tax rate, and I think more importantly, the creation of those tax opportunity zones that I know you know intimately. My question is, do you see transactions about to unfold that will seek to take advantage of that aspect of the tax law?
What's happening is this. So there's plenty of money out here right now, folks, that wants to get in. The money's already been raised inside the real estate business. I would say that most folks are basically holding back and see what type of hit this is going to take. Because I can tell you, you know, I bought a place a couple weeks ago. I got about 5 of them on my desk right now, and one of them will probably go, meaning I'll bite on. In both cases, though, both of those deals were almost 35 to 40% lower than they were 2 months ago. So, you know, I suspect across the board it's going to be somewhere around 20%. So the action hasn't happened yet. There's a blockage. Well, there's a blockage because just like I can say to you that, hey, guess what? I think that was a great deal. And I say to Tommy, like, hey, man, I think I got a great deal. What happens in 3 months from now? Do you see what I'm saying? Because still, there's too many things that still are not there. Now, all our rents, which is pretty cool. I've gotten all our rents. That's quite a feat in itself. Do you know what I'm saying?
Yes, thanks so much on that. Might I ask a favor, please, just going forward? And, Tom, of course, we have known each other since back at the last great financial crisis, when, in fact, you became very active buying distressed properties down there in Florida.
Right.
Would you alert your listeners to things that you are seeing, transactions taking place, not only in Florida, but things that you become aware of just being a market participant and your Bloomberg news sources, so we can stay on top of who's starting to buy in at...
To push the money out. No, absolutely,
prices.
man.
I'd appreciate that.
Absolutely, man. That's why we're here. Absolutely. No doubt. No doubt.
Thank you.
Cooking, brother.
Have a good weekend.
You too, man. Have a great one. Have a safe one. So it's going to be interesting to Tom. They're selling it down a little bit. It's going to be interesting if something actually come across that just basically did this. Because if this market sells down coming into tomorrow, folks, that won't be cool. Because what they'll end up doing,
that will not be cool at all.
Yeah, people will be worried. Coming into Tuesday, man. Stay right there, Tommy. Tommy and I come right back. We have the Dow down 8, Nasdaq's off 55, S&P's off 12.5. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's flat, Nasdaq's up 51, S&Ps are off 12. Gold's down $30, silver's down 64 cents. Notes and bonds basically up slightly. So I heard you talking about Disney, Tom. It's going to be interesting to see what does happen, right?
It sure is, right? I texted you that last night, man. Yesterday, you had a story on local news talking about that they were going to submit their plan to some council, economic council, recovery, all this stuff that they have to submit their plan for opening. Turns out Disney said they're not going to submit that plan. It was Universal's going to submit the plan. Then you had the mayor saying that he anticipates all the parks are going to get him their plans by Thursday afternoon anyway. And what did you text back, right? We're going to be dealing with that for a while, man, in terms of speculation, rumors. When are we opening? What's going to happen? You could see a second lockdown. It's going to be happening, man. It's not going away until this COVID's going away, and that's not happening in the next 6, 12, 18 months, I'd say.
Yeah, no, there's no doubt. There's no doubt. What we have seen, downtown St. Pete's opening up, and just as I said with Kevin, a few people that I was talking to that really were locked in, do you know what I mean, for a couple of months,
sure.
Man. They were really happy to be out. It was like, we've been lucky because we're not in that situation. Well, you've been.
Right.
I mean, you've been. I haven't seen you in 2 months.
Exactly. What are we talking about, right? And I was able to make it to the beach myself last weekend, which was nice. You know, there's things you can do and still be safe, man. Wear your mask, be respectful of everybody else, keep your social distancing. But we got to be able to get back outside, man. 2-3 months, you know, come on, right?
Seriously, man. Seriously.
Yeah.
So today, folks, you know, we look at this S&P. The real question is going to be, number one, do you stay down on price? And number two, do you get an expansion of volume? Because if you ever get an expansion of volume, folks, coming into the Memorial Day weekend and you're down in price, that is an omen that you're going south, man.
I mean, risk reward, we're at almost 3,000, man, in the S&P.
Exactly.
Yeah.
Stay right there, folks. Think of some coming up next. Basil Chapman, Steve Rhodes. Thanks, pal.